You're pre-approved for a mortgage. You're scrolling through listings, maybe even touring homes, and then you see the news. Mortgage rates just went up. What does this mean for your pre-approval? Are you still good to buy? Or do you have to start over? Let's break down exactly what happens when rates rise after pre-approval and what you can do to protect yourself. First, let's clear something up. Pre-approval and rate lock are not the same thing. When you get a pre-approval, your lender looks at your credit, income, debts, and assets, and they run the numbers based on the rates available at that time. Your pre-approval letter basically says, yes, you look good to buy up to this amount. But here's the catch. Until you lock your interest rate, nothing is guaranteed, and you can't lock until you find a house. Rates can move up or down between the day you get pre-approved and the day you get an accepted offer on a house. Think of your pre-approval as a green light, not your final loan terms. So what if rates go up? The main issue is your monthly payment. Even a small increase in rates can raise your payment enough to change your budget. For example, if you're borrowing $300,000, a 1% jump in rate can increase your payment by a couple $100s a month. Higher rates mean less buying power too. A 1.25% jump in rate can reduce buying power by $47,000. Or rising rates can push you out of approval range, since lenders pay close attention to your debt-to-income ratio, or DTI. If the higher payment pushes your DTI above program guidelines, your approval could be at risk. What can you do about it? If you found a house, there are steps you can take to protect yourself. Lock your rate. Once you're under contract on a home, you can lock in your rate for a set time period, usually 30 to 60 days. That means no matter what happens in the market during the window, your rate will not change. Extend your lock. Some lenders offer longer lock periods, such as 90 days or more. These can cost extra, but if you're shopping in a volatile market, it might be worth the peace of mind. Float down your rate. A few lenders offer rate locks with a float down option. That means if rates go down after you lock, you may still be able to take advantage of the lower rate. And shop around. Rates and fees vary from lender to lender. Even a small difference in rate or closing costs could make a big impact over time. Do not be afraid to compare. What if you're already impacted? If rising rates have already changed your numbers, don't panic. You still have options. You might look at a slightly less expensive home to keep your payment in line. You can increase your down payment to reduce the loan amount, or you might consider a different loan program like FHA or VA loans, which sometimes have more flexible DTI guidelines. It's not about giving up. It's about adjusting your strategy so you can still move forward. The key to handling rate changes is staying proactive. Check in with your lender regularly while you're house hunting. Know what payment range you're comfortable with, not just what you're technically approved for. And ask upfront about rate lock policies, cost, and whether float downs are available. That way, you're ready to act quickly when the right house and the right rate line up. Pre-approval is a great first step, but remember, it does not freeze your rate. Mortgage rates can shift daily, and sometimes multiple times in a single day. Stay informed, work closely with your lender, and be flexible with your strategy. A little preparation now can save you from big surprises later and keep your path to homeownership on track. For more mortgage pre-approval and rate lock tips, visit mortgageresearch.com. And if you found this video helpful, hit like, subscribe, and tap that notification bell so you don't miss any future updates. And if you've got questions, drop them in the comments. We are here to help. Thanks for watching, and here's to locking in not just your loan, but your peace of mind.